Hi there, traders. This is Brad Gilbert with today's trading action. All right, now as we go through the back end of the Asian market, we can see very clearly here US equity treasuries, the price is slightly down, which means the yields are slightly up. And that's put a negative spin on equities, and that's what it should do. And we've got a clear risk-off profile with Euro, Sterling, Aussie, Kiwi, all under pressure, and the dollar rallying against most, except for the yen. And you can see that risk on, risk off profile there with the risk pairs, okay? Aussie, Kiwi, CAD, they are the commodity currencies, the risk currencies. And when you see them all red, you're pretty sure it's a risk off profile. All right, so that's where we are with the current markets. Now, let's just have a look at the charts here, right? And the dollar, well, we've seen a really good sort of squeeze, I'd say short squeeze, where the dollar has just slowly squeezed. The whole market was short. As we come into the Fed interest rate cuts on the 18th of September, and we have seen a bit of a clean out in stale positions. Euro down, Sterling down, Aussie down, current account numbers out of Australia, which don't really usually have much of an impact, really weak. And then you've got the Kiwi sort of following suit there as well. So what have we got here? What's going on? Well, we've just got the tail end of last week, right? The last week of the month. We're coming into the key data. Really, the markets are waiting to see the employment numbers Friday, but we do have a few things coming out today, and in particular on the Swissy, right? GDP, CPI numbers. Keep a close eye on the Swiss, right? This is the sort of the sleeping giant of the major currency pairs. Usually not a lot happening, but when things do go south, they go south or sour very quickly, and that's what we're looking for today with the they're looking for a bit of a bounce here in the month-on-month CPI numbers, the year-on-year, slightly lower than last month, but, you know, a bit of a decent range. And you got the GDP numbers there as well to keep an eye on. Now, I'll come into the interest rate probabilities in a second, because those inflation numbers, actually, let me just sort of jump over there, because those inflation numbers will have some sort of implications there. Now, the Swiss, okay, due to meet on the 26th, 0.25% cut, 73% factored in, right? But a 50 basis point cut is 26.5. So today's inflation numbers, if we get weaker inflation numbers in Switzerland, you're going to see a bit of a more of a rush towards a 50 basis point cut. And that should see the Swiss slide, right? Dollar rally. So that's definitely something worth to keep an eye on. And then as we go through the North America session, you know, S&P Global Manufacturing PMI numbers in Canada and the US, the ISM manufacturing numbers really, to me, are probably the key for the US session. Reuters poll, 47.5 and 46 to 49.1, the range of that data, right? So, you know what? This is probably one of the last days before things kick into gear a little bit, but just keep an eye on those on your charts, US momentum. It is fading now that we've had that full sort of slide pullback. And you can see, you know, it's starting to sort of gravitate or hang around those trend lines on a lot of these instruments. And we'll see how it plays out. All right. That's the way that I've got a new bull bear line, which you can see yellow on the charts. This is going to be a key part of the analysis sort of going forward with, you know what, when you see support and resistance lining up with the bull bear line, it can be a very powerful indicator that things are about to sort of change as far as momentum goes. I'll explain more about that later. But today, you know, keep an eye on the Swissy, right? It's been sort of a bit of a sleeping giant. Right now, the momentum is obviously up, and I would be favoring the top side for the moment, especially if we get weak numbers. We should see a test much higher and a nice easy trade at the top side if we do get weaker Swiss CPI numbers there. All right. The ISM manufacturing numbers out of the US, first sort of number for the month. Let's see what happens with those numbers. See if we get any sort of gauge on momentum. At the moment, you've probably got to say momentum is still up for the dollar just at the moment. So stronger US numbers works to the top side. All right, well, let's see how it plays out, guys. All the best. Cheerio.